All right, so let's talk about NFOs. And Mirae Asset Mutual Fund announces India's first multi-factor-based ETF on Nifty Smallcap 250 Index, Mirae Asset Nifty Smallcap 250 Momentum Quality 100 ETF, an open-ended scheme replicating or tracking Nifty Smallcap 250 Momentum Quality 100 Total Return Index, and the Mirae Asset Nifty Smallcap 250 Momentum Quality 100 ETF Fund of Fund. Again, an open-ended fund of fund scheme investing in units of Mirae Asset Nifty Smallcap 250 Momentum Quality 100 ETF. So let's discuss more on this. And today I have with me Siddharth Srivastava, Head ETF Products and Fund Manager, Mirae Asset Investment Manager. Siddharth, good evening and welcome to the Money Show. So this week you're launching two NFOs and both pertaining to a small cap category. I really want to understand the concept behind launching an ETF in this particular category. Is it because you've seen a growing interest of investors towards the small cap category and this is a huge market for you right now?
First of all, thank you, Kavita, for having me on this show. We as a product manufacturers are very agnostic to active funds or passive funds. Here, through this strategy, which is India's first multi-factor strategy on small cap segment, I think we have created a product which is very robust, which will hopefully capture the upside due to selection based on momentum parameters, and which will protect the downside whenever there is a correction due to the selection based on quality parameters also. And the results have shown, at least based on back testing, that it outperforms several actively managed small cap funds. So why not have a rule-based multi-factor slash quant fund, which can create a very transparent portfolio for investors, provide comfort to investor that the portfolio is created first screening for liquidity and then selecting 100 best companies based on quality metrics as well as momentum metrics. And the past data of the index has been very encouraging. So we have proceeded to launch our first small cap offering through a passive fund.
Siddharth, let's go deeper into this, and I also want to understand how are these NFOs aiming to mitigate the downside risk in the investment?
And so I think now factor investing is very popular in Indian market, especially on the passive side. So we are seeing a good amount of interest on momentum based funds, on low volatility based funds, etc. Now quality is actually investors should not think that this is something really out of this world. Actually, it's just based on common sense. If you look, a company which is doing well on profitability metrics, which is having a good financial health, and which has earning stability, is expected to have a robust behavior in terms of its stock performance. And if we look in history, any portfolio where portfolio construction has been based on selecting company based on these quality metrics have fallen less in bad times during the phase of market correction more often than not. So if you are creating a portfolio even in small cap category, by looking at profitability, by looking at financial health, by looking at earning stability, you are in a way creating a robust portfolio. And the data shows that during the times of market corrections on volatility, the portfolio has exhibited a sturdiness which investors seeks in a small cap portfolio.
So, Siddharth, also explain to me, why should an investor, if we have to really adopt a passive strategy as far as small cap category is concerned, why not go for an index and why go for an ETF fund of fund?
So ultimately, index funds or ETFs ultimately mirror the underlying benchmark. This is, as I mentioned, first benchmark which National Stock Exchange has created using multiple factors. We were involved in sort of conception of this strategy, and we believe that through ETF people can participate, buy these small cap fund units on exchange based on intraday net asset value, uh, can buy in any quantum. Entry and exit is pretty seamless if one is comfortable with trading on exchange. And for people who, for example, are more comfortable with a non-demat route, a mutual fund route, wants to do SIP, STPs, can use fund of fund to take the exposure in this underlying index. So we are just simply providing two ways to take exposure in this particular portfolio, and it is up to the investor to prefer either the demat route, where you can use ETF to buy and sell even one unit on exchange at intraday prices, or the fund of fund to buy or sell based on day close NAV and do systematic investment plans like SIP, STPs, etc.
Siddharth, tell me one thing now, if because we've seen a trend where a lot of inflow is coming in the mid and small cap category. Now, if someone already has exposure to this category in their portfolio, how should they place such kind of an ETF or an ETF fund of fund? Looking at the already existing exposure, do you think this will be over diversification or over diversifying in this particular market cap?
So see, what we believe is that active plus passive is the best way forward, because on the active side, you have fund manager style. He his style of investment can be value based or a growth based, quality based, etc. And they go through a performance cycle. Sometimes they outperform and sometimes they underperform. For example, we have always been talking about passive investment in the large cap space, but if you look, there's hardly one or two mid cap active funds which are generating better return than the mid cap 150 benchmark, which is very surprising. Even on the small cap side, this portfolio is outperforming almost 80% of small cap active funds in 1 year period, 7 year period, and 10 year period, which is again very stark. So I think the best way forward is to choose a quality, a good active fund, and choose a good passive fund, so that even if active fund is underperforming, if you want to do redemption, you can do redemption via the passive fund, and just obviously hope for that a cycle will turn and active fund will start performing again. I think a 50-50 approach, or rather approach where you are parking some money in active fund and passive fund, is the way forward, because we are seeing that alpha is generation is getting difficult across segments, and that is not just true with large cap, but even with mid cap and small cap.
And how cost effective would it be to invest in ETFs?
So, as expected, ETF will have a lower TER compared to active funds. The TER is expected to be around 0.35%, plus minus few basis point, and the fund of fund direct plan will be roughly around 0.45 to 0.5%, which is fairly cheap when you compare it with active mutual funds in this category.
So, last question to you. Till when are these NFOs open?
So the ETF is open till 21st of Feb. It has already started, and the fund of fund has also already started. NFO is ongoing, and it is open till 28th of Feb.
All right, I think that will be all. One more avenue to invest in small cap, just in case investors are still looking for some diversification, the passive way specifically. Thank you so much, Siddharth, for being on the show and helping our viewers with all the nitty-gritties related to this NFO. Thank you.